Good morning, students. You are here because you are learning how to prepare a bank reconciliation. You are here to learn the process of preparing a bank reconciliation. You need this set of notes in front of you. So if you haven't got this, please go and get it now. Previously, you learned that money is quite easily stolen. Even money in the bank is easily stolen by employees of a business. Therefore, businesses need to put in some internal control to make sure that money as an asset is safeguarded. Now, that in the previous chapter, you learned that there are various examples of internal control, one of them being bank reconciliation. In this topic, you will learn specifically how to prepare a bank reconciliation. We're just going to go directly to page 4 first. All right, we didn't do the theory this time. I can do it now in class. Bank reconciliation is prepared for what purposes? It is prepared to account for the differences between the updated cash at bank and the bank statement balance. So basically, there is a difference between your cash at bank amount and your bank statement, and you want to know what the differences are, because you would be very worried, wouldn't you, if your cash at bank and your bank statement balances are different? So what are the reasons for bank reconciliation? Firstly, why you prepare a bank reconciliation is because you want to update the cash at bank account due to timing differences. Secondly, you want to identify errors in the bank statement or cash at bank account. Thirdly, bank reconciliation is done as a form of internal control to prevent fraud and theft in your business. Now, there are five steps to preparing a bank reconciliation. All right, but before that, let's take a look at these two documents in front of you. Now, if you take a look at example 1, this is the cash at bank account for Josh Line for the month of December 20x3. They have given you two pieces of information. One is the cash at bank account, and the other one is the bank statement. Now, what I would like you to do is to take a look at the ending balance for both items. Ending balance means what? Ending balance means at the end of the month, how much money there is recorded in the cash at bank account and how much money it is recorded in the bank statement. So for the cash at bank account, firstly, I want to ask you this question. Who prepares the cash at bank account? Okay, so have a thought about it. Who prepares the cash at bank account? It is the accountant who prepares the cash at bank account. The accountant is the one who records all the checks that's received and all the checks that is paid out. So he is the one who has control over the cash at bank account. On the other hand, who is the one who prepares the bank statement? It is the banker who is the one who prepares the bank statement. Now the banker is the one who prepares all the withdrawals and all the deposits. He receives money on behalf of the business and records it in the bank statement. Now, do these two people talk frequently to each other? They do not talk frequently to each other. The banker and the accountant do not speak to each other. It's not as though the accountant, when he receives some money from Good, he'll be like, "Oh, banker, I received money from Good. Have you received money from Good yet?" The accountant does not do that. In the same way, it's not as though the banker, when he makes some payment, he calls up the accountant and goes, "Hey, accountant, have you made this payment?" He doesn't do that either. So both of them actually do their own stuff and they don't really know what's happening with each other. It's only at the end of the month that the banker will prepare the bank statement, and this bank statement is then sent over to the accountant to check. Actually, the banker doesn't even prepare the bank statement. It is just printed out by a computer system and sent to the accountant. All right, and therefore it is unsurprising All right, it is unsurprising that at the end of the month, there are some differences. So how do I know what is the end of the month balance for the cash at bank? Yes, I look at the end of the month and I realize that according to my cash at bank account, I have $8,455. But the bank statement tells me something different. At the end of the month, my bank statement tells me I only have $2,755 in my bank statement. Now, not only that, you also realize there's something different. Excuse me. In the cash at bank account, you notice that the balances are debits. Why are the balances debits? Now, debits tell you that this is an asset account, right? So, at the end of the month, this particular business has got an asset, 8455. Now, on the other hand, the bank statement has a credit. Now, what does credit tell you? Credit tells you that this is a liability. All right. Now, why a liability? Think about it this way. Does the money in the bank statement belong to the banker? No, it doesn't. Who does it belong to? It actually belongs to the business. So money in the bank statement belongs to the business, doesn't belong to the banker. All right. So you look at that. Because it belongs to the business and not the banker, it is shown as a liability, shown as a credit balance. And look at that, there's actually a difference between the cash at bank account, $8,000 and the bank statement, $2,000. So there is a difference and we want to find out what the differences are. And what we do is a bank reconciliation process to find out what the differences between the cash at bank account and the bank statement are. Next, we want to look at the bank statement and look at the different parts of a bank statement. Now, if I look at my bank statement, you'll notice that instead of debits and credits, I have this word withdrawal and this word deposit. Now, the word withdrawal means a minus. All right, minus. There has been some payment by the banker from the business bank account. And the word deposit means plus. There has been some receipt of money from the business bank account. So you need to get used to the terms withdrawals and deposits. So just also want to remind you to always write the double entry for cash at bank account, right? Sorry, not double entry, write the accounting rule for cash at bank account. So debits will be positive, you receive money in the cash at bank account, and credits will be minus, you make payments from the cash at bank account. All right, now that we have got all this out of the way, let's start looking at the differences between the both of them. So again, just want to remind you that the accountant is doing his own stuff and the banker is doing his own stuff. Both of them do not speak to each other. So how do we identify the difference? Now, can you remember the Pokemon thing that you played? Right? You actually compared one picture to another picture and you try to find what difference there are in both pictures, right? Now, the same thing that you do here. This is picture number 1, the cash at bank is picture number 1, and bank statement is picture number 2. And you're trying to find out what differences there are between the both of them. All right, so let's start. Now, but the first thing you have to do is step 1. You will have to agree opening balances. All right, agree opening balances. What does agree opening balances mean? Agree opening balances means that you have to check that the two balance brought downs are the same. Why? Because you're trying to see why there is an ending difference. And if the opening balance is already different, how can the ending ever be the same, right? It's not going to be a fair thing. It's like you're running a race. Everybody must start on the same starting line. If not, definitely people are going to end up differently, right? So A, agree opening balances. Now, opening balances means the balance brought down. All right, the balance brought down. And I'm going to agree the opening balance of the cash at bank December 1st is 4855. Now, if I take a look at the bank statement, the opening is also 4855. So since these two are the same, I will put a tick beside both numbers. The tick tells me that both have been agreed. Both of them are the same. Then I have to go on individually and look at the different items and see whether they are the same. So the first item, can you see cash at bank? There is a credit or minus 1100. So I'm going to my bank statement and try to find to see whether there is a withdrawal or minus 1100. Have you found it? Actually, yes, you have found it. There is one. All right. So can you see that in the bank statement, there is one on the 3rd of December? So what you need to do is to put a tick for both. All right, you should put a tick for both. Now the tick means that the payment inside the cash at bank account has been recorded in the bank statement. Now let's go on and take a look at the second item, which is this cash at bank debit increased by 4,000 sales revenue, right? So cash at bank, there is a debit increased by 4,000. On the other hand, can you find it in the bank statement? After looking through, no, I can't seem to find anything in the bank statement that says debit or increase by 4,000. So what are you going to do? You are going to circle 4,000. Because that is the difference. You are going to tick the differences. You're going to tick whatever is the same and circle the differences. Let's go and take a look at the next item. In the cash at bank account, there's a credit of 2,000, a payment of 2,000. Can you find that in the bank statement? Yes, you can find that on the 14th of December, there is a withdrawal of 2,000. So since you can find it, you should put a tick beside both numbers. Let's go and find the next item. In the cash at bank account, there's a debit or receipt of money plus debit plus of 4,005. Is there the same in the bank statement? In the bank statement, oh, there's actually two 4,005, one on the 22nd and one on the 28th. But which one is the correct one? Should you tick the one in the withdrawal column or tick the one in the deposit column? Your cash at bank says a debit plus 4,005. So the bank statement, the correct one you should tick is a deposit plus 4,005. And we are going to do that. I'm not going to tick the one in the withdrawal column because it's not the plus sign. Okay, so since this one in the withdrawal column is not reflected in the cash at bank account, what has happened here? Oh, actually, you notice that it's a dishonored check. Zafini paid, but after that, for whatever reason, maybe she doesn't have enough money in her bank account, her check was dishonored. So you should circle this amount. It wasn't reflected in the cash at bank account. The accountant probably doesn't know about it. Okay, last item, you can see that cash at bank, there is a credit minus of 1,008 yuan. But is this reflected in the bank statement? It is not. So you should circle it. Now, apart from that, inside the bank statement, there are two other items which are not ticked at all, which means the accountant hasn't recorded it. So you should tick that. So what's going to happen now? Since there are all these items that appears that are unrecorded, we will have to record it somewhere, right? So the next thing that you do is this. Okay, so the first step is already done. You have already compared the items. Sorry, you have already agreed the opening balance. Step 2, you also did. You compare the cash at bank account and the bank statement. You tick those that are the same and you circle and highlight those that are different. The third thing that you're going to do is this. You're going to update the cash at bank account. Right? Why? What are you going to update it with? Can you see that there are some items in the bank statement that you have circled? These items in the bank statement that you circled, the banker knows about it, but the accountant doesn't know about it. And therefore, these 3 items here are not inside your cash at bank account. So what should you do? Since you know that there are some money that you receive and some money you paid by the banker, you should update it in the cash at bank account, right? So that's what we're going to do next. Step number 3 is update the cash at bank account. So when we update a cash at bank account, firstly, we will type the account name, cash at bank account. All right. Next, we will name the account. This one account means that it is a ledger. So the columns are date, particulars, debit, credit, and finally balance. All right. So these accounts, these columns. Now, when you update the cash at bank account, a few things that you must remember. You see your cash at bank here. You want to update it using a balance, right? You're going to start with a balance. But which balance are you going to start? Are you going to start with the 4855 balance or are you going to start with the 8455 balance? Which balance are you going to start with? Okay, you think about it, you are not going to use 4855 because if you use 4855, it is the old balance and there are so many things that happen in between. You are going to use the 8455 balance. So when we update a cash at bank account, we are going to start with the latest balance, 8455. And how do I start? I start with 2023. Or 2020, sorry. And this is December 31st, the last day of the month. Always start with the last day of the month. And balance brought down. All right, balance brought down. Now, this final balance, we are going to put in the balance column, 8455. And we will put a debit behind it, like this. All right. Now, we are going to update these 3 items here. Okay, these 3 items here. This one, and this one. We are going to all update it inside the cash at bank account. So let's update it one item at a time. Firstly, in the bank statement, you have a withdrawal of 1,200. And not forgetting that, I'm going to put my accounting rule. A debit, all right, is a plus. Okay, so I just want to remind myself that debits are plus. And credits are minus. I just want to remind myself about this. So since there is a bank statement, a withdrawal of 1,002, I should record a debit or plus 1,000, a withdrawal. Withdrawal is take out, right? So cash at bank must credit or minus 1,002. What is the other account that's going to be affected? Look at the other account in the particulars column. In the bank statement, the particulars column says there is insurance. So inside the particulars column, I will type insurance expense. What about the date? the date is always December 31st. For everything from now on, right? I mean, for this cash at bank account, it's all going to be December 1st, December 1st, December 31st, the last day of the month, because that's when you found out. Okay, so now we are going to calculate our balance column, 8,455, credit or minus 1,002, and that will give you 7,255 debit. So there you go. I have updated my first item. Okay, I already finished this one. Next one, bank statement, there's a deposit of 2,200. So cash at bank account, there's a deposit of plus of 2,200. I put it inside the cash at bank, debit plus column. What is the other account that is affected? The other account that is affected is commission. So the question is this a commission income or commission expense? That was deposited in your account, which means you got some money. So if you got some money, it must be a income. So I should write commission income. Then I am going to calculate my balance, 7,255 plus 2,200. And yes, I've updated this 2,200. Next, I have one last item. Oh, there is a dishonored check. Now, a dishonored check, the bank statement shows as a minus. So the cash at bank account should also show it as a minus. A dishonored check minus 14500 in the cash at bank account. What is the other account that should be recorded? Can I just write dishonored check? No, you cannot write dishonored check in the particulars column. It's not a account name. So what is the account name? Some people will just write Zafini, but no, we have to remember in class we learned that dishonored check is from trade receivables. So we should write trade receivables hyphen Zafini. Then balance column, I'm going to calculate the balance column. It's in the credit column, so I'm going to take 9,455 credit minus 4,500. And that will give me a cash at bank account of 4,955. And with that, I have actually finished updating my cash at bank account. So when I finish updating my cash at bank account, I'm going to bring the balance down to the next financial year, 2021, December, not December, after December is January 1st. And to bring down my balance, I will write balance brought down. And in the balance column, it will be written 4,955 debit. However, can you still see that there is still a difference? My balance here, 4,955 in my updated cash at bank account is still different from my bank statement value. Can you see that they are still different? By right, they are supposed to be the same, but they are still different. So why are there still differences? You probably have realized because the bank statement has got two items that the banker doesn't know about. There was a receipt of $4,000 from sales revenue, and there was a payment to Ziyuan, $1,800, which the banker doesn't know about. And that is actually your next step. Your next step, step number 4, is to prepare bank reconciliation. You prepare this statement called a bank reconciliation. Now, I'm going to show you how to prepare the bank reconciliation. With the bank reconciliation, you are going to prepare it based or using the circle items in the cash at bank account. So there are 2 items here in the cash at bank account. There is a $4,000 and there is a 1,008. We're going to update it or prepare it using these 2 values. So let's see how do we prepare our bank reconciliation statement. So firstly, we write our title, and the title you will literally copy out whatever you have in the question. Sometimes the question already prepares it for you, but if you don't know, the question doesn't prepare it for you, you literally copy out the question. So you write bank reconciliation statement as at 31st December 2020. You literally copy it out. You will only use 1 column, so just ignore the second column. Now you're going to start off first with the balance as per bank account. So you write here, balance as per bank statement. What does this word as per mean? As per just means according to. Balance according to your bank statement. So what is your final balance according to your bank statement? According to your bank statement, you have 2755, right? There was an ending balance of 2755. So you are going to use that in your bank reconciliation. Okay, you can put here. And remember we said credit means that you have money in the bank. All right, so if you see a credit, it means that you have an asset in the bank account. All right, and that's a good thing. Okay, so we're going to write here balance as per bank statement. You can write here credit. Credit means that there is an asset. Excuse me, I don't know why this is disappearing. Okay, so let me type that again. Credit means there's an asset. All right. Bracket. Oops. Right, so we write type credit, and the credit tells you that this is a asset to you. So how much is there in the cash at bank inside the bank statement? 2755. So we are going to write here balance as per bank statement 2755. You've got $2,755 in the bank statement. Now what happened is that it is actually different from your updated bank statement, cash at bank account, right? So you look your cash at bank account has got 4955. So it's different, right? So we're going to write here adjusted cash at bank account. Now adjusted cash at bank account means this is the amount that you have already updated. So 4955. Now why are there some differences? There are some differences because you receive money and you paid money. Your accountant recorded it, but your banker did not record it. What are the 2 items? The 2 items are here. Firstly, you receive some money, right? You receive this, right? You receive this $4,000. So the banker received, the accountant received this amount. Accountant receive. But banker did not know. Your accountant received, but your banker did not know. Now, this has a special name, and the special name is, and this special name of this item here is called deposit in transit. What is a deposit in transit? So everybody can go up to page number 2. Over here, a deposit in transit. Basically, a deposit in transit is when a bank, the business has deposited a check with the bank, but the bank has not processed the check yet. Basically, the check is on its way to the bank. The money is on its way to the bank, but the banker hasn't recorded the plus yet. So that's a deposit in transit. All right. Now it's easy to remember deposit in transit. That this amount here in the debit column is a deposit in transit because you deposit in a debit column starts with a D, and deposit in transit also starts with a D. So what are you going to do with deposits in transit? In your bank reconciliation, you are going to add deposits in transit. Why add deposits in transit? You add deposits in transit because this $4,000 wasn't recorded in the bank statement, but it's recorded in your cash at bank, and the $4,000 is causing the difference between the cash at bank account and the bank statement. So you add deposit in transit. Now, how do you do that? You just write add deposit in transit. In the next line, you type whatever is written in the bank cash at bank account. In this case, what was written in the cash at bank account is sales revenue. And this $4,000, you just type it inside the last column, like that. So let's do a math. 2007 plus $4,000. At this point in time, is don't need to type this. I just illustrating, showing you only. It is 6,755, right? Oh, still different. Why is it still different? There's another reason. There's another item, right? So let's go and take a look what is the other item. Now, this other item, this 1,800, there you go, I found the other item. This 1,800 item is also causing a difference between your cash at bank account and your bank statement. Now, what is this item called? So what happened? So over here, accountant paid, but banker does not know. So your accountant has paid, but your banker doesn't know. So again, this has a special name. It's called checks not yet presented. It's called a check not yet presented. Let's have a look and see what is a check not yet presented. So a check not yet presented is right over here. Basically, the business has issued a check to the supplier, but the supplier has not presented the check for payment. So basically, the business knows, but the banker doesn't know. And since the banker doesn't know, right, the banker has not deducted this amount. All right, the banker has not deducted this 1,008 from the bank account. So since you have already paid, you're supposed to have paid it, but you haven't paid it yet. So inside your bank reconciliation statement, you are going to write less. You can leave a line and then you write less. Less what? The item is called checks not yet presented. All right. Checks not yet presented is easy to remember because check starts with a C, right? And it appears in the credit column. C also start with the letter C. So deposit in transit start with D, appear in debit column. Check not yet presented start with C, appear in credit column. And this amount, 1800, is from Ziyuan. So checks not yet presented. Now since it's less, okay, so what do I type here? I can write here, I can just write Ziyuan. I don't need to write trade payable or trade receivable. You know why? Because this is not an account, this is just a statement. So I don't need to write trade payable or trade receivable. But I know lah, if I make a payment to Ziyuan, right, then it is actually my trade payable Ziyuan. I actually don't have to write trade payable, just write Ziyuan is fine. And you make a payment from your cash at bank account, so you should record as a minus 1800. Now you're going to, that's all, right? So let's going to see what we're going to do is we're going to draw a triple line. Okay, so you've got one line here, and then adjusted cash at bank is going to be in your triple line. Means that is your final answer. Now you're going to take your calculator and calculate 2755. Okay, wait, I have a calculator. So I'm going to calculate on screen, then you can see. 2755 plus 4000 minus 1800. You should get exactly the same amount. All right. So after you finish your bank reconciliation statement, this value that you should get here should be exactly the same as your cash in bank value. And with this, you know that your entire process is correct. So in summary, there are some common cash transactions like internet banking, cash, receipt of cash, and payment or receipt of check. Now, sometimes this check may be dishonored for these 5 reasons, and you must know these 5 reasons. Right, regardless of that, cash and checks, you need to have internal control. Why? So that your asset is protected. Now, one of the internal control that we looked at today was bank reconciliation. Bank reconciliation is an important step or important internal control to make sure that your money in your bank account has not been stolen. Now, there are some steps to performing your bank reconciliation. You have to agree opening balances. You have to compare the two accounts, tick whatever is the same, circle whatever is different. You need to update your cash at bank account and finally prepare your bank reconciliation. So with this, I hope you understand how to prepare a bank reconciliation. Now, what do you need? You just need lots of practice. Bye, children.